Here with us now is certified financial planner Doug Flynn of Flynn Zito Capital Management. Doug, long time no see. Always good to see you, sir.
Hi, Hena. How are you?
I'm great, thank you. So
Good.
The Iran war is now disrupting supply chains across Asia. Like I mentioned before, this isn't just oil. How quickly can these kinds of global disruptions start hitting us in our wallets, the American consumer?
It will take a little bit of time, and partly because 80% of the oil that comes through the strait ends up in Asia. So it makes perfect sense that they're going to feel it first there. And it begins always with the price shock of oil, but it starts to quickly transition, as we're seeing, into all that oil makes. And so whether it's plastics and all these other related items, it's showing up in Asia first. Now, the longer this goes, we talk about duration and how long this is going to last a lot. And the longer it goes, it can certainly start impacting us over here. But you're going to see not only just these areas in Asia first, it's going to also go into household essentials, it's possibly go into healthcare issues, and then autos and other things related. All that's going to come before it really starts to ramp up over here.
President Trump did speak, well, he's been speaking about the Strait of Hormuz. Here's what he said about the prices of oil just yesterday, Doug.
Are you willing to end this conflict with Iran charging tolls for passage through the strait?
Us charging tolls?
Iran.
What about us charging tolls?
Is that something you're considering?
I'd rather do that than let them have them, right? Why shouldn't we? We're the winner. We won.
We won. Oil has climbed above $100 a barrel again. What point do these energy prices start becoming a real threat to economic growth here in the United States?
Oh, it's gonna. The longer it goes, the more it's going to start to weigh, and it can have an impact on inflation. It's certainly costing even the average American consumer, because just the prices are up globally. It's costing them maybe $40 a month right now. But the higher the prices go, the more it's going to impact us. And you know, it really comes down to this strait. The longer it stays closed, the higher those prices are going to go, because there's what's called a risk premium on the trading of that oil, and that will stay high. And as soon as it opens up and everything starts to flow freely again, then they'll produce more than the demand is, and the prices will drop, and then we'll be on the other side. But we don't see that yet, and so the longer this goes, you're going to start to feel it.
Yesterday, Wall Street was showing some kind of optimism. Most of the closing market or the closing numbers were all in the green, because many were hoping for a ceasefire. As you look at our screen, or for our viewers, different story today. Do you expect this downwards trend to continue, Doug?
You know, oil and the stock market have been in an inverse relationship pretty much since the beginning of this. And pretty much when oil goes down, the stock market goes up, and vice versa. So you're seeing that play out daily, and here's just another indicator of that. And I think that's the backdrop, is we want oil to be back to where it was, and it may take a little bit longer than the president thinks it's going to take, but we can get back there, and that will then put the wind at our back to the other things as people start to shift more towards earnings and the profits of the company. Everything is just so mixed in here with the price of oil and what it might do depending on how long it lasts.
I have less than a minute, Doug, with two questions here. Do you think oil prices can go below $60 a barrel, or is that we're just never going to see those numbers again, or at least not in the relative future? And if this conflict drags on, what is the biggest financial risk for American households?
So could oil prices get back to where they basically were, down to $65? I think they can, but it takes 4 times as long for the prices to drop than it is for them to go up. So it can take time, and it may take a long time. It's not going to go back right away. And the big fear is that if this really gets choked off for a long time, and oil prices get up to $150 or $200 a barrel, that is really where you're going to start to see it globally. And I don't think anybody wants that. And those are the key points, and why the market doesn't know exactly which way it's going to go till we have some clarity.
All right, Doug Flynn, always breaking down the numbers for us and simplifying such complicated issues. Thank you so much, Doug Flynn.